How many of you are logged in with your system? So we're gonna do it's a practical session. So I'm going to be going over what we did over the last week. But first I want to know what you've been able to comprehend based on what has been taught. And I want to know how much you guys practiced over the last week. Because at the end of the day, I don't just want to teach. It's kind of like a program where I know you're practicing. So if you've not practiced from what you're going to show to me, I know you did not practice and you're not serious. I'm going to catch you today. Today is day. It's like you're doing a live exam today. Okay. So we're just going to go over the last week's session. And if you hopped in on the session today, thinking you just want to learn more, then not proper because you've learned something and your goal should be over the last couple of days since the last time we met, the things you've been able to go through, you've been able to implement or practice or see. Then if you did not, then you would have questions. So before we come to the end of the time we'll ask questions, I want to know what you've been able to comprehend. So your practice, you show me, each and every one of you on the session, you're going to show me from last class. So let me first ask, what have we treated so far from our first session? Type it on the chat. Okay, no. You know what we're going to do right now? So edit. I think there is let me give. What did we treat on the last session? You're gonna mute yourself. What did we cover from our first class? I mean,
Free. Hello. Hi, everyone.
no. Hold on, not you first. I said edit.
Oh.
Edit, you're looking at your notes.
No, sorry, I don't even have notes. I am laughing because I've been on the road the last few days with my children for taking them on vacation. So I've just managed to settle down. But I do intend to get into my notes actually and then go over the lessons. But of course I was in the class last Saturday and I know the main discussion over this past week has been on market structure and market characteristics. We talked about liquidity. We talked about learning the structure and the behavior of the market. And like I said, this week has been a bit of a crazy week for me, so less focused. So I haven't really had time enough to digest and review notes. Like I said, I just was moving with my children, but I know I need to get down to work. How do you do that more? So I hope I'm not so disappointing.
We'll get there. Olayinka.
So I can hear you.
Yeah. So
I was not in the class last Saturday because I was thinking it's gonna be 9:30, but I actually checked the PDF. I think the first class is actually market structure. Yes. From the PDF also break of structure, change of character, and characteristics of break of structure. But for last on Tuesday, we actually talked about the waves, the liquidity, how to identify them, the time zone, and the time frame to check them, and all of that. That's all I can say.
Okay, were you able to go through the video?
Only the PDF in my email. Yeah.
The video was sent.
I didn't get to see that.
Your two device, can you put it off, please? Your two device, or put down your mic.
Okay.
And Ismail, your name? Okay, so okay. Oh man. There's a video. What's your email? After every recording, the video is sent. The video of the recording is sent to your mail. You didn't check. Olayinka.
Can I speak?
Yeah.
So I saw the PDF in the email actually, so that's why I jot out every other thing there, and then I studied.
I'm not talking about the PDF. I'm talking about the video from YouTube. The video on YouTube of the recording of the class. You didn't attend the class, but we recorded it and we sent it.
Maybe I will go back and check the email to see if I'll find it there.
Okay. Okay, Roy. Got something for me. Mr. Roy.
Hi, how you doing? You know what? I haven't received no video neither from the last class.
You didn't receive a video email?
Of the last class.
That's the Saturday class. Just a moment. Before you say...
Last video I received from you were July 6th.
July 6th was when? July 6th was...
The Saturday. So that's the last video?
Yeah, that's okay. Saturday. That's the day.
Okay, yeah, sorry. It's been sent.
Because I know I sent it immediately after the class. Immediately after the class, I sent it. And the whole goal for sending the video is so you can... Well, let me just leave you. You have something for me.
You know, so far it's like it's like double. It's like easy things that you heard so many times before, but at the same time it's difficult. And I think now for me personally, it's the first time that it's like clicking with the change of character, market structure, break of structure, the liquidity. So it's a lot. It's like all the pieces of the puzzles are on my table, and it's now time to put them all together. And it's not easy so far, but we're getting there.
Beautiful. Beautiful. I think I like that. That's coming from a place of you've been able to pay attention to what is the label on the market, you know, from a standpoint of, oh, you're not seeing them from a different point of view than you used to see them. You know, before you just see them as chart patterns, you know, that support resistance, but you didn't really identify them as structures that had individual component on how they are formed. And now that you're seeing that this is how they are formed, it's making sense. It's like giving you a headway of, oh, this I think how I'm going to build. So it's almost like telling you this is how you build. Am I correct?
Yep. Like what you said a couple of times, that liquidity comes after market structure. And that is a different way of thinking than how it was for me before that. And that by itself start to change the whole game.
Yeah, I'm glad about that. Okay, thank you, Mr. Roy. Finny, you joined late. You joined late, and let's hear what you. So the question I asked was, give us a feedback on what we've been able to go. What have we gone through over the last week?
We've gone through market structure and then change of character, knowing the charts, trend reversals, support and resistance.
Who did support and resistance with you? Did I do support and resistance? That's your market. That's your initial market knowledge coming in. That's not me.
Okay. How to identify highs and lows, higher highs, higher lows, then swift highs, swift lows, and I guess the last class was change of character, how to identify it. And that's pretty much it, I guess.
Okay, so would you say, because I'm gonna bring every one of you live to show me, except Madam Edith, and I think did Olayinka just gone through the PDF, so you've not gone through the video, so you probably don't qualify to show me anything. But would you say going through that class, you have an understanding on each of the component that was expressed? Would you say that?
Yes, at least I have a better understanding of it.
Okay, that you can show me. If I ask you to show me what a bullish structure is right now, you should be able to show me a bullish structure.
Yes.
And you should be able to, you can show what an internal structure is.
Yes.
Okay. You can show me what a swing high and a swing low is.
Yes.
Okay, and you can show me what a break of structure and change of character is.
Yes.
Okay, let's give it a shot. Do you have what to share? What are you using?
Currently I'm not using like anything yet because this is like my first class.
No, I mean, what device are you using that you can use to share? What device?
My phone.
We are using your phone. Do you use your phone to do analysis?
Like I said earlier, like I'm a beginner, so I've not done anything like trading or anything before. But I could show notes.
Okay, you've not done anything on TradingView?
Yes.
Okay, you've not opened a TradingView account?
No.
Oh boy, how did you escape into my class? It was supposed to be a trader's class. That's heavy load on you. Man. So you've not used TradingView before? You've not traded before?
No.
Whoa. That's huge. Because that's another layer of learning. That's why I specifically made because it's another layer of learning. Let me just explain that a bit. The foundation for this session is laid on your understanding of what Forex is, like buy, sells. You already know those things. You already have an understanding of TradingView, how the market works. So this course is kind of like a reviver for traders. Okay. People who at least they have the basic understanding of trading, like TradingView, like basic formation of chart, support, resistance. So this course is like to put you in the path of learning, not the beginning of learning. Okay. So it's going to be a lot more stressful because I'm starting from, because the questions I'm asking you right now, they are questions a trader knows. You're going to finish this course with accountability. You're going to ask yourself, what did you learn? And guess what's going to be happening? Because you don't know how to apply this knowledge. You may know what I'm sharing with you. Just a moment, please. There's a difference between learning or having a beginner orientation on trading than to build understanding on being a trader. It's two different classes. Like I'm going to primary school, and this is it. This is a college class. So you may have an understanding of what we're doing here, but you may not have a mental, because why? The basic thing apply. You don't have it yet. Like you telling me that you don't bought, you've not sold before. So what you were supposed to start with, you were supposed to start with a beginner course in trading. Are you with me?
Yes.
Am I still here? Oh.
Your line is sort of breaking. Okay.
Can you guys hear me now? Can you hear me now, Fee?
Yes, I can hear you now.
Okay, so the what I'm trying to say is you'd have to tax yourself, even if you go through what we're doing and we complete it. I promise you may not have application that you may like, or you may have understanding, but you may not have application. Because why? There are certain things we are not teaching here. I'm not teaching them here because it's not a beginner's course. So you're going to be kind of empty. So what would I advise from my standpoint? What would I advise you do? You'd have to go through the beginner phase of trading. Okay, like the beginner phase. That's what we do in the academy. So our academy takes care of the beginner phase. This course is just for traders to set them right. Okay, so you'd have to make a decision to go through the beginner phase. If Madam Edith, you're saying the same thing too, because I can see in the chat you are, and I actually made it clear when I was talking about the course. The course is not for beginners, it's for traders. It's not for those who want to trade, it's for those who are trading. Because everything I'm teaching you right now is market structure. Market structure is not the beginning of trading. It's actually those, you would understand market structure if you've been trading before, and it's kind of giving you a foundation of how buildings are built in the market. So you have to be in the market first. So if you're not in the market first, one of the things you want to do for yourself, you want to make a decision between now and the time of finish. Okay, that I want to start a proper school of trading. So you have to go back to the basics. What is forex? What is pips, lot size, support, resistance, buy, sells. Before you even come to the aspect of liquidity, you want to have this basic formation first. So if you don't have that, that would be my advice. Okay, that doesn't stop me that far. I can teach you. And the truth is, you can self-learn if that's the route you want to go. Kendra, how can I self-learn? You can go to YouTube and what's the basis of forex? What's trading view? Set up. I can give you videos. You can set up a trading view. The question is, how are you going to use that? You need pampering. Let me use the word. You need to pamper yourself into this environment. You need to be taught. Okay. So if you don't have that, please do that. You don't want to waste this course. You want to have that backup foundation of trading. So Madam Edit, that goes to you as well, because if you don't, you're going to feel empty. You can't understand the higher stuff if the basic stuff are not taken care of. Okay. So do you understand me?
Yes, I do.
Okay.
I
So
hear you.
you do that and let me know what your decision is. And if you need my advice on how you go about it, just talk to me after the session. Okay. So I'm going to bring Roy. Okay. So what I just basically need you to do for me, you have a system, you have something you can share, right?
Yes. Yes.
Okay. What I need you to do for me now is you show me
What I did.
a bullish market structure with all of the component of, so I need you to analyze a chart, a bullish market structure, identifying the low, the high, the higher low, the higher high, then break of structure, then change of character.
So I did some preparation. Let me see.
would make me rich. Since I
Sure,
give the
sure.
gems.
Nice, beautiful. I
Okay,
like
you
that.
can see my screen? Yes.
Yeah.
Okay. So, to start, like I said, it is still a lot
Coming
because
together. I know.
all of
I've
the
seen the I've seen the I've seen the proof of coming together.
Okay, so my let's say the reason of my thoughts here was starting looking just to see what the market brings, and having a bearish movement on the market. So I started from here, like a lower low compared to this one. So lower low, you have going up. This is a lower low, back up. And then here, there's a change of sentiment. Hold on. Is it still sharing? Yes. Okay. Change of sentiment, because instead of, let's say, this is the first sign in the market that the bearish movement for now is broken, because you have here a higher low. So I identified this as the change of sentiment. So you can start preparing yourself to see, okay, is this gonna turn into a bullish market? And that's exactly what it did. Then you have here, yeah, it's like a higher high compared to this one. Then you have again a higher low, and this is then the break of structure. And from there, you go, you can see it as let me see, this is then the swing low, then the swing high on the third leg, and that is then the change of character, and you can see the distribution coming right after that.
Okay. I like what you showed me. There is a 40%, at least I love what you said in the beginning. They're coming together. So I can see a 40% putting together some components, okay, which is good. Okay, yeah, some things are still out of, they're not really in place, but at least that idea put together makes sense. So I'd give you 40%, and that 40% is a pass mark, because in the sense that not all traders are at 100%. Okay, in fact, you don't get 100%. It's just between 20% and 70%. 70% is almost like a genius. Okay, putting all these things together. So I give you 40%. You were able to give me something to tell me it's not to get it right, it's to get you right. You understand what you've been able to grasp, and you were able to put it into something that could be defined. And defining it to me, I could see what you're giving to me, that yeah, at least the little time you've spent in learning, you've been able to pick up something, and that is the key to learning, understanding. So thank you very much. You can stop sharing. You can stop sharing your screen.
Yes. Hold on. You stop sharing. Yes.
Good. So what is really the most important thing in market structure is understanding the foundation, the building of every liquidity in the market. So when you want to build any structure, the foundation is the key. We trade liquidity. We do not trade structure. We trade liquidity. So, but a lot of people, what they do is that they trade structure from price action. So price action is about structure. Liquidity, okay, is what we trade. And when you understand the concept of trading liquidity, you want to think as a builder. as a builder in the market, you are not going to rent a foundation. Nobody rents a foundation. Everybody rents a building. Am I correct? When you say you buy a house right now, it's except you're buying a land. You don't buy a foundation. Okay, you don't buy a foundation. You buy a building. Okay, that is what a lot of people do in the market. They trade the market. They trade the foundation. But the people who really make the most beautiful money put the beautiful work in creating the building. So every building that people like today was first had an architectural building, an architectural structure, then implemented foundation. What market structure is all about is the implemented foundation of the architectural work of trading. So you have to dig deep to understand every component of a building, the pillar, okay, the painting, the location, So it's almost like putting yourself as a builder. So it starts with the market behavior that we talked about. So excuse me, let me log in with my it starts with the market behavior that we talked about. So two things. So when we're talking about liquidity don't drop on consolidating market, it drop on trending market. So we have the uptrend and the downtrend. So I'm ruminating on this, or I'm reiterating on this so that we could bring us home for everyone to understand. So it's either a market is going up or it is coming down. Okay. So you basically see what is the component of a bullish market. This is the component of a bullish market. Let me see if I can clean this my annotation. I can't clean the things that are already here. Okay, because I didn't put them here. Okay, so you find out that this and this is the component of a bullish market. It has a higher low and a higher low. If it has two higher low, then you have a component of a bullish market. Two higher low and two higher high. That's a component of a bullish market. It means after you see something like this, you can expect liquidity to come in. The moment you see component like this, now this is indifferent of time frame. It could be any time frame. It could be 5 minutes. It could be 10 minutes. It could be, and I'm going to be showing you guys with alongside the market. So let me share my full screen so that I can move in between. Okay, so I'm moving in between my trading view. Okay, good. So I'm going to be moving in between my trading view, the PDF. So this is what I want you guys to see. So when we are looking at, so everything that I've showed you on the PDF, and if you leave this session, please make sure you watch the last session, okay? So this is, so it's irrespective of any time frame. So I'm on the 5 minutes right now, okay? But I want us to learn from the foundation of, where's Euro USD? Okay, good. So I want us to learn from the foundation of the hourly, okay? One of the things you see significantly in the market before there's going to be great distribution, or you see, okay, Kenry, at what point that do we have the longest distribution? Okay, you're going to find a minimum. Okay, so this is 1, this is 2. After this, what happened? It took away what? The range. Okay, so range was what? It attempted the range. So this is distribution. Okay. Now, a lot of people could call this, actually, this is distribution if I'm using a smaller time frame, but this is distribution. You could trust distribution to go for a higher range when you do the third, okay? We have something of this nature. So you'll see this again in what I'm trying to tell you. So in bullish market structure, we have this and we have this, okay? So this is first, this is second. And that's always after the second, you have distribution. So on this market, the greatest distribution happened here. Okay, if you look here right now, okay, at what point is distribution? So what's distribution? Distribution is when the highest volume actually take on the play on the market. So you're going to see that this is market structure. Okay, so we had what? We had one, we had two. Okay, this is second, this is third. What happened? Distribution came in. All right, so you find that in the market. Sometimes it's not too clear, but it's often on the third structure, on the second, after the second structure, that you get distribution. It's most of the time. Okay, you find that you could trust, boom, you'd always get it. It may be small, it may be big, okay, but you'd always get distribution. All right. So that's one of the things you want to find out. Okay, you want to notice in the market. Then we had this. Okay, what happens after? Distribution. So all of these downwards, okay, is distribution. So that's one of the things you want to relate to when you're practicing. Okay, when you're practicing, when the market hits a low and it starts changing character, one of the things you're going to find is you're going to find that the market is going to create. So we had hold on. So you pick it high. So this, you may come low, come. This is internal structure. So it actually went far high. Sorry, let me take this out. So sometimes it can be clear, sometimes it can be playful, okay, unclear. But you'd always find out when market comes, so there's a low. After this, what happened? Distribution came in. Okay, so that changed the character. But before distribution, main volume came in. Okay, we had what? 1, 2. So this is just to show you, okay, that when it comes to market structure, you want to watch out for the layers. So you find that you want to find out that before liquidity will come in, don't be scared. Okay, the market is going to show you what happens after distribution. So this is distribution. This is what a trader is looking for, momentum. Okay, but before momentum is formed, now sometimes it may deceive you quickly. Okay, but it will definitely come back to the structure. So there's one, there's two. Are you guys seeing? I've been showing you guys bullish structure. Are you guys seeing what I showed you guys in the PDF right now? Okay, so this is 1, 2 before distribution. If it doesn't distribute after the second one, market is going to consolidate or slow down. But most of the time, over 60% of the time, when market is in, so there are a couple of things you're going to put together. When market hits a zone of return, when market hits either a bullish liquidity, a bearish liquidity side or a bullish liquidity side, okay, it is there's every tendency that there's going to be a reversal. So what do you mean, Kenbry? So before you look at market structure changing, there's another component to factor in. Okay, so before I am going to look at, say, that's why part of the session you guys are going to be doing, or you're going to be learning more tonight. So we're having 2 sessions. So there's a strategy session. So before you think of selling or buying, market must do a couple of things. Last session, I told you guys about liquidity. Okay, the session on practical liquidity and range. So every market has a liquidity. So the buy side or the sell side liquidity. So when this market was buying up, you'd have to identify that there is a liquidity setup. So if the market is buying, you look for what? The sell side liquidity. So this was a sell side liquidity. Okay. If the market is selling, you look for what? A buy side liquidity. Okay. So this was the buy side liquidity of the market where it bought before. And when you get the buy side liquidity, you can capture the range. So this was the range of this buy side liquidity. This was the range of this buy side liquidity. This gives you perspective of what you're trading. So the liquidity gives you the range. You want to write that down. Okay. Those are the two most important things you should factor in before you do analysis. Or else you're just playing a wild goose chase. So if a market is selling, I'll look for a buy side liquidity. If a market is buying, I'll look for a sell side liquidity. So as this market was coming down, I'd look for what? A buy side liquidity. So this was a buy side liquidity. So I knew at this point in time, I'm supposed to be looking for reversals. So now that I'm looking for reversals, okay, I will now look for market structure to play back in. And that is what we had. This was still a bearish till it came here. The moment it created the first high, created another one, this is what we call displacement. It came back into what? This liquidity. I could expect the next turn to give me that move. So this would have, if this was up here, you will find that one thing. So this was below liquidity. That's why this trade didn't go back to what? The sell-side liquidity. Because why? When this came in, I was supposed to take a trade up here. If I did, okay, I would have already exited my, what I would call one-to-one, because if I was taking this trade, I would move in profit and it will come back. So this is one of those trades I'll be showing us where in bullish structure, it didn't move far. Not every trade will complete the circle. It didn't move far because why? It's breaking and consolidated. That's why I said after every third, okay, if it doesn't move, it means the trade is not ready, consolidated, okay? So it was a clear bearish move. But what am I trying to say? To identify your mode of analysis, capture your range. And your range is going to be telling you, based in a bearish market, look for a previous buy side liquidity. In a bullish market, look for a previous sell side liquidity. So look, coming back to where market is right now. So market is here. Market is consolidating. So you don't have market structure. So let's say let's look for a market that is trending. Good. Everything is out right now. So this market is trending. So if I want to look for a sell, because I should be looking for a sell in this type of market. Why? The market is in the range of sell side liquidity. So this is a sell side liquidity. Okay. And since this is the sell side liquidity, you want to look at the range. This was the range of the sell side liquidity. What is a range? What I'll be looking at as my TP level. What the market did, because trading is a reflection of what the market has done before. So the moment I captured this sell side liquidity, okay, I knew that when the market sold here a couple of months ago, it sold here. So I could take that as my yardstick of analysis, that when I sell here, I could put my pressure of TP here. Does this make sense? Put sense on the chat. That is what you need. Okay. So if this market proceed and keep going up, this is now going to be my sell side liquidity. Okay. And since the market sold here, it had a bust up here. It means if I sell this market, I'll be expecting my major TP here. That's a range. That's what we call range. Are we together? Put 10 on the chat if you got what I said. So this is the range of my analysis for when the market takes this. This is going to be the range of my analysis when the market takes this. Because one of the things in trading is a lot of people trade without perspective and direction. When you understand this, you know when to exit, you will know when to leave, you will know when to be in the market. And that is how you manage trades. Are we together? Put tracking on the chat. I want to know we're together. Okay. So when this market was buying, so Kenry, how do you really measure the range? Okay, I want to show you guys something. So let's take this market to the past. Okay. Let's take it to the past where we can now look for buy side liquidity. Good. So no, I think I have to bring it forward a bit so that you guys can understand how to capture a range. Okay, so this is what I wanted to do. All right, you guys watch. So how does the range really play out in the market? So market is selling now. You just have to capture what? The buy side liquidity when market is selling. So the first buy side liquidity is here. Okay, when this market bought here, okay, this was going to be my buy side liquidity. And if I buy here, we have a couple of, so I have exit point here. So this is an exit point. Good. If I buy here, it means if I buy this range, it's here. It's going to be my TP point. Because why? That's where probably break. So if I buy, the next is here. This is a buy side liquidity too. So since the market didn't accept this, it's coming in here. This is going to be my buy side liquidity. And when that happens, this is going to be my range of analysis. Okay. So that's to tell you that's going to be my TP level. So I'm not greedy. So this is the range for this. This is the range for this. But in this case of this market actually went to lower to the what? The buy side liquidity of this. So it means I have to, if I get a bullish market structure here, this is going to be my TP level. Are we together? Put 2 on the chart. This is going to be my TP level. So let's see. Okay, the next one would be here. The next buy side liquidity will be here. Okay, and the level will be here. So this gives you perspective on when to exit a market, because many people don't know how to exit a market, hence they lose their winning trades. But at every point in time, you are able to know your range of analysis. You don't have a problem. You'd have less problem. You maximize all of your profits in the market. So if the market decides to come down lower than this without creating bullish market structure, I'm now going to look at this range of analysis and this buy side liquidity, and this is going to be my range of analysis. Are you guys getting? Do you guys get these 2 things now? All right, put 100 in the chat if you guys got these 2 things. Okay, so for a bearish market, I'm looking for a buy side liquidity. For a bullish market, I'm looking for a sell side liquidity. Let's see how the market played out. Okay. So market took this one. So watch. All right, beautiful. So good. Let's pause. So market was able to take this buy side liquidity, right? Watch what happened. The moment it took it, what did I tell you happens after market? You watch out for what? Bullish market structure. What do we have? The first thing is I'll have what? A high. Then we have what? A low. Then we have what? A high. Then we have what? A low. After that one, what happened? Distribution came in. Okay, so this is our first distribution. Let's see. Based on the buy side liquidity, what do you have here? TP level. You're out of the market. Are you with me right now? Put 1 on the chat. I want you guys to know you're. So based off on this, based off on this, this is your TP level. Okay, so the market is not there yet. I was looking at a different one. The market is not there yet. Okay, but now that you know you're in the trade already, okay, let's see. Boom. Can you see what happened? So you're on TP done. At this point in time, you don't have to be losing more money because the trade can come back down because that is a liquidity level. Okay, but in this case, this market still went up. So it means market combined. So we're looking at 4 hour, but we could switch to a daily. Look at what market did. Okay, now we looked at this. So when market took this on a daily structure, you'll find out that these are all clumsy, went all high. So we could say this is all in a daily structure. It's not figmented like in a 4 hour. So this is, I could say this is all together in a daily. It means the market looked at a daily extension. Okay, so I'll quickly explain. But you guys got what I showed you. So it means this is all one range in a daily. So this is one of the things you guys need to understand about range. So let me take this. So when the market pulls up, come down, pulls up, come down, pulls up, come down, this is a range. If a market doesn't do up to 40% of its movement downwards, so this is a range because it came down, yes, went up, came down. It did not do 40% reversal, 40 to 50% reversal. It is all a range. So, but when the market does this, this, so let me just say, okay, now this is all still a bullish, but you can't say this is a range. Because why? The moment the market hit here, it did 40%. So this is the range of this market. And this is another range of this market. Okay, so the moment market goes up and comes down and it does 40%, okay, you can separate the range. Okay, that is one of the things I just showed you guys now. So if I clean this very well, you get to see something. Okay, so based off on the 4-hour on the daily, you would see clearly that market just kept pulling up. Okay, so we had this. Yeah, I would say not one move, because this is a daily. You kind of like, what is the highest high this market made? Okay, so it came here. All right, came here. This is not up to 40%. Okay, 40% is around here, then 50% here. Okay, so this is what around 30 something. So and it kept going up. Yeah, and came back down. So this is still not up to. So this is up to, let's measure it with a fib. So if I measure here and here, okay. So this was, so the moment 50% were activated, so this becomes my range. This is not in my range anymore. Okay. So I could say my range was all of this on a daily, but in a 4-hour, no. Because in a 4-hour, it did what I'd call where was I? Okay. In a 4-hour, you can see when it moved 40% down, 40% down, 40% down. Are you guys getting it? So each of them are ranges in a 4-hour, but on the daily combined, they are all one range. You guys got this? I need you guys to let me know. Put 3 on the chat. Okay, based off on the range, on how to put range together, so you don't collapse. So sometimes stick to the time frame you're trading. But if it keeps going, don't get gullible and say, oh, let me just leave my trade. No, stick to the time frame, because while you're setting up hourly, the trade may actually be playing daily. So you just have to play on the rules of your analysis. Go ahead, Roy.
I do understand what you're saying, but in my mind, I have what you hear all the time. The trend is your friend. Follow the trend. But the way I understand it now, it's that, yeah, the trend is your friend, but you have to be looking for the change, the reversal.
Good. I like that. That is one of the things I like. I like the fact that you brought that up. So let me explain this to everyone. Because there are certain things we set, you cannot make some certain changes if you do not come outside of the box. So in trading, a lot of people have been put in a box. One of those boxes is they tell you how to trade, and you trade how they control. One of those control, every time you're trading with the trend, okay, and the trend is your friend, you are being controlled. It's like the job system today. You can go to all of the schools you like, get all of the degrees. You're going to be a worker. Your paycheck is being controlled. You cannot earn more than your boss, except you come outside of the environment of the worker bee. Am I making sense? It's the same with trading. For every time they tell you the rules of the market, okay, and you follow those rules, you are in a box. Everybody's trading with the trend. That is why majority of everybody is failing. Okay, because you are in the box they control. They control the liquidity in the market, and they put everybody in that box. Everybody do the same thing. And guess what they do? You're doing the same thing. They can manipulate you. And you'll be a victim of that manipulation, because why? You are following their rules. Okay, so there are rules that set traders apart. Everything lags in trading except market structure. And this is why I'm teaching you a strategy. I'm teaching you the structure and a strategy that beats that those who understand market structure will trade. That's where the strategy is going to come in. So what time do you have to trade? Trade when they are finished and manipulation and control. So that is where strategy is going to come in. So what I tell students right now, do not trade against the trend, because the trend is your friend. You don't need the friend until it bends. You need against the trend. The biggest potentials in the market are not when you are following the trend. They are when you know when the trend changes. Okay, that is where liquidity comes in. Liquidity always attacks the beginning of every market. So if you're following the trend, it means the market has already moved. It's like jumping into a train. It's like you're being advised that jump into a train that has already moved. Trust me, in real life scenario, you will be bruised. True or true? That is why traders are being bruised. You have to know where the train is going. It stops. Know the bus stop of every market, and you know how to get in early. That is what market structure gives to us. It gives us the foundation of the next wave. It gives us the foundation. So I'm always at the bend of every trend. So I don't even trade based on trend. I trade based on liquidity. Latecomers trade based on trend, and latecomers are the ones messed up in the market. So you guys have no idea how precious this concept means in trading. It's the game changer. Only a few people can understand. And I just want you guys to be the few in the market that would understand the game, the bigger gameplay. Are you guys getting this? Are you getting this, Roy? So I get the part where you said the concept of trading has been, do not trade against the trend. Trend, support, resistance, major support, resistance, higher time frame. Come on, trust me. Two things ring in the bell of every owner of liquidity. Where is volume? They rate volume. So they don't care about trend. You're the one who see trend. Because that is where they want to put you. So you follow, after they've moved, you now follow how they're moving. Now they decide to change it back, take you out. You don't even know how you're floating. But at every point in time, if a market reaches its limit, okay, so if you notice if the market reaches, so understanding liquidity from what I was just showing you guys, okay, so if the market is buying, it's going to change. So this is a buy. It's going to definitely change. How do I know it changed? I have to look at the previous buy, a previous sell liquidity, okay? And if you look at this, so based off on this market, this is the one it did before. So this is the one it did before. So there was a sell side liquidity here, and that dropped market here. So this was a liquidity. It means if I'm selling, okay, this market is, okay, this present market is selling, I would exit here. Ladies and gentlemen, can you see when market got here? What happened? It went back. This would have been, oh, will it continue? You don't know if it's going to continue because there's no yardstick as to why you should continue with the market. This would have been your proper range. The only time I'll get in on this trade again is if it breaks level. So this, when this market went up, this was the change of character. So this is another trade. The moment it came down, okay, it has to go back in here before I'm going to trade it down. It didn't. So this trade is not mine. So this is just liquidity floating back to basics of not my strategy. Okay. So this is change of character. When change of character happens, market tends to go back. This didn't really go back for me to get in. That would have been, oh, I can now take, since this is another one, I can now take this. I can take market here. And can you see how market did? See, market are based on structures. Everything I'm showing you, can you see? This would have been my next try. Can you see how this happened? Immediately that happened, took market back. Okay. The next one, watch. Immediately that happened, took market back. Market always respects the level, but it's short. So imagine you are taking those short ones because of the trend. You say, oh, if it will take you years for you to understand trading. But what I'm showing you, it's quite easy for you to know, okay, when to buy. So the moment I knew this were my range, this were my range, this were my range, I knew that market could collapse. On a daily, market could collapse and get up here. But I'm telling you, I don't analyze on daily, I analyze on hour. So if you're analyzing on hour, you would have been safely out of this market. Imagine if every day you get in precisely in the market and you target this. So if I gotten in this market and this was my range, okay, it means here, I would have been in an entry here, okay? Imagine the risk to reward. Because that's one thing you're looking for. I'm longing here, okay? Risk to reward. How much is that? 1 to 6. Because this would have been my exit. Okay? Yeah, so this would have been my exit. I got my 1 to 1. Precisely. If you get 100 trades that you're always precisely getting right, 70% of the time, do you know how much you would be in the next 2 years? How much you're going to be worth in trading? Precisely right. The whole goal is Out of every 100 trades you track with market structure, if you get it right, precision is going to come into your trading, and you can say, oh, you can invest in your trading. Okay. There is a difference when you know where a market starts and where it's going and you invest in it. That is one of the things I'm trying to offer you with this trade. You're not trading. If you guys hear some of the testimonies of the previous class, it's changed their trading already. I've not even done strategy. Before the strategies class, you guys heard some of their testimony. Before the strategy class, they'd already changed the way they trade and they're already getting results on just the putting together of this. There's a clear understanding you have on when to get in on the trade and when to exit. That nobody can teach you. The only way you get that is if you understand the market. And that's one of the things I'm trying to bring. Does this make sense? Okay. Do you guys get this? So I did this session of range and liquidity with them last week, and I'm doing with you guys now. Because I want you, because after this session, we're going to be around, what's the time? It's 8 o'clock. Around 8:30, we're going to be doing the strategy session. But I wanted you guys to understand the market structure built. For a bullish structure, you have to look at for what? A bearish liquidity factor. So you don't analyze the market until you know where it's going to change. So when this trend was trending down, I was only looking for where it's going to change. I knew this was going to be a change factor. I know this was going to be a change factor. I know this was going to be a change factor. And every point it hits, I know the range factor. Do you guys get what I'm saying? So this is a change factor. This is a buy-side liquidity. 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 So if this is stopped, I'll just look for bearish market structure. It did not activate bearish market structure. That's why I didn't go. Okay, so this was eliminated. So this is what we call liquidity mitigation. It mitigated this one, never reversed. Okay, now it mitigated this one, never reversed. There was no bullish market structure. There was no third. Okay, it mitigated this one. Okay, pushed. Can you see there was a third? The moment it went up, came down. Okay, went up, came down. There was a third. And what happened? Fa. So you know, the moment you activate the third, you can find your trade. And that's what we're going to be doing today. Okay, how to find your trade. So after every liquidity is hit, you know your range. And you just tap into it if after a bullish market structure comes in. Okay, so this was a range. Okay, this was a range. So you don't get greedy. I'll show you guys another market of a bearish market structure. So let's go to another pair. So let's see it on a bearish structure. So we are looking at what has the market done before. So if I'm looking at a bearish market structure, so I'll be looking at this. So when this market was buying, what would I be looking for? Sell side liquidity. So if I'm looking at this sell side liquidity, what am I looking for? This is going to be the range. You guys got true or true? So when the market sold here, previously sold down here, so that becomes my range. So it means I can now capitalize on analyzing for that range or trading for that range. So this is my range. Good. So what do I need to do after I've identified my sell side liquidity? I wait for what? Bearish market structure. So let's play this market and see. Good. What do we have? Okay, so we have 1, 2. Okay, the third is the distribution. Am I correct? Except the market goes up to beat this and beat this, we don't have a trade. Let's watch. Are you kidding me? Did you guys find it now? Okay, let's see if he completed it. Okay, he did. Are you joking? Did you guys see it? Okay, did you guys see it? It did it. Now, many people won't know it will get here, but most of the time it does, because that is what market replaces what it does. It replaces liquidity. So since it sold here before, it most likely will do it. All you just need to do is find your area of entry. So first wave, okay, second wave. The third wave is what? Boom, your movement. So you find where to enter. The third wave, trading the third wave, this is where strategy comes in. This is strategy point. The moment market creates the second wave and it comes back, this is our trade. This is where you get your third entry, and it did it very well. Okay, did you guys get this? Put 10 on the chat if you guys get this. So I'm taking one session to show you guys in the market how liquidity forms and the direction it goes. I'm not just showing you how to trade. I'm showing you where to trade, when to trade, and how long to trade. Destination. You can't learn this and you're joking. So let's look at another bearish movement, okay? Watch this. So we have this. Another bearish scenario is this. So this happened on the 4-hour. Watch this. I'm going to put a line here, because I want you guys to watch this. I'm going to put a line here, okay? And I'm going to switch this to 1 hour. I just want you guys to see what played out. So based off on the 1 hour, you guys watch. So based off on the 1 hour, what am I looking for? Sell side. Since it was buying, I'm looking for my sell side liquidity. And when the sell side liquidity came in, watch this. Market dropped. Okay, this didn't do 50%. This didn't do 50%. Okay, so I could say here. Okay, now watch. So this was a long trade. But I'll also show you guys something. So we're looking at a sell side liquidity that came all the way down here. So if we really even break it down, it came all the way down here because it didn't really, this would have been, major. This would have been our sell side liquidity. It means if I sell in here, I'm going to get out here. Okay. Now, I'm not saying you take one trade and wait all the way here. That's stupid. you should be taking profit at every major milestone. But I'm just trying the extension. And let's see if it played it out. So this is when it hit liquidity, sell side liquidity, and created what? What do we have? 1, 2, 3. Am I correct? And I told you guys what? The third is always bringing the distribution. Where did it go to? Now I came here reversed. So this would have been a bad trade because this would have been a very stupid bad trade in the sense that you'll be feeling bad because coming back not hit your TP. But eventually, did it do it? It did it. It completed the range. So this is one of the things you trade for. Sometimes the range can be long, sometimes it can be short. I'm just trying to show you how to point out liquidity. The market shows you what to look out for. Just a lot of people don't know how to look out for it. Have you guys been able to see how to look out for liquidity right now in analysis from what I've just shown you? Yes or no? So I've shown you for a buy, and I've shown you for a sell. Let me know in the chat. Okay. So for a buy side, when market is bullish, okay, you look out for a sell side liquidity. When the market is bearish, you look for a buy side liquidity. So, and after you found the liquidity, factors were playing. Before every major move in the market, there's always a manipulation. So you always watch out for that manipulation. Before every major liquidity will distribute, there tends over 90%. There's always a manipulation. And it is what we call liquidity sweep, raid. So it goes like this. If the market is going to move in structures, so let's say this was a previous market. No, I can't do this to be too, let me use a marker. So let me use this. So let's say this was a previous structure. So we have this and we have this. And the market actually came, do this. So this become our buy side liquidity. So this is a buy side liquidity. One of the things you always find out, the market will not just hit you and start going back. It will come and raid. So there is a what we call liquidity sweep raid. Then it's going to start forming. Okay. Then flip. Then push up. Most of the time, the main move happens after the market changes character. And it's going to find this back and pew. This is where you as a smart trader gets in. But this is what we call liquidity sweep. It always happens. And if it comes to this sell side liquidity, it's the same thing. Okay, it's going to move. If a trade hits a major sell side liquidity and start going back, don't get in. It's dangerous, because that is where they find the fools of the market. Because they know the moment it start coming and it's forming, many people will enter. The next you just see a raid. A raid, okay, and it start forming, then that's when the big move will happen. Okay, so this is what takes over 90% of the traders out. They follow what has happened. Okay, I follow what will happen, not what has happened. What will happen based off on, if I see a bullish foundation, it is every tendency that there's going to be a bullish building. That is what will happen, because that is what every bullish foundation is. That's what every bearish foundation. So I'm not trading what has happened. It is dangerous, because why? What has happened can change. But what will happen? Every bullish structure would attract bullish liquidity. Every bearish structure will attract. So out of 100 trades, and you see out of 100 trades, bullish structures, 100 bullish structures, over 80 will attract bullish liquidity. So I can trade that happenstance. That's the whole goal. You know when the market is going to bend based off on market structure. So you wait out for that market structure to happen and you trade it. Like I read something today. Trading is not about making money. It's about taking trades. When you have a statistics for taking trade, the statistics will produce the money. So focus on the statistics. Any questions so far? So if you guys go back to the recording where I broke down, so I sent you guys recording, every recording that I've done on each of the class. See, you guys do yourself a favor. Don't ignore the simple things. This class is a complex one, because I showed you guys the market, but it will be a lot easier when you understand the simple things when the complex times come. So this is what I do when it comes to learning. I regurgitate information. I watch a video. If it means a lot to me, did this class mean a lot to you guys? Let me know. Between 1 and 100, how would you rate this class? Based on the meaningfulness to you. So if someone like me attend this class and I see that, wow, this is beautiful. Just the revelation of what was just shown me right now is crazy. I may not fully understand it, but I want to. What I would do is I'll go back to the previous class and start watching the video repeatedly. I'll give myself a week. I'll repeat the videos. I can pick one video and I'll watch it 21 times. So some of you are playing. How did you guys think I became an educator? You think it's by just sitting on the screen and waiting for someone to teach me? No. I've given you guys on the last session how you teach yourself. Learning is about, there was a video I posted, how you learn. Okay, people don't know how to learn. I can't teach you a thing. Okay, you learn from me. I show you how to learn from me. Knowledge is self-built. Everybody, that's why you can see today I teach. If I show you all of my mentors, I don't trade like them. Because why? They didn't teach me. I taught myself. There's something, there's a DNA. You have something in you that God gave you. If you infuse knowledge into that thing, it will manifest. So someone cannot teach you to be a professional. They can only show you the way on how you can make yourself a professional. Are you guys getting it? So what is the way to professionalize your learning? You take the information, you experience it, then you understand it. The moment you understand it, if you expose yourself to practice, it will teach you. Your practice experiences make up your professional DNA. Many of you are waiting for people to do it for you. No, it doesn't work that way. So you don't watch video, you don't watch every statistics we hold, record, facts hold it that everything you're going to master, you'd have done it a minimum of 21 times to 100 times. For practice, 21 times. For understanding, 100 times. Some of you are trading right now, you've not done the strategy 100 times to see the result. When 100 trades show you statistics, out of every 100, you got 60, then you repeat it to improve. If you get the same 60 or get lesser, you're teaching yourself. That is how you get established. That's how you get to mastery. Now, mastery would lead you to earning. A lot of people want to earn as amateurs by prediction, by assumption. And that is why a lot of people fail. Okay. So in the next 30 minutes, we're going to be joining the strategy class. Any question? It's the same link, so you don't have to leave. They will join you. Okay. Any questions so far?
Every just checking, this session is also recorded or not?
Yeah, it's recorded, but I'm going to end it before the next session so you guys can have it.
Okay.
Yeah. So I'm going to end it